All right, this one actually scared me a little bit. Sequoia Capital, one of the top venture firms in Silicon Valley, just declared their $200 million investment in FTX as a total loss. In a letter to investors, they explained that there's a massive liquidity crunch that has led to solvency issues. However, they did explain that it wasn't like a top 10 position in the fund, and the total investment was less than 3% of the committed capital to the fund. There's something called a write-down. This is when an investor takes an unrealized loss on an investment, and it happens when the value of the asset falls below the original purchase price. For example, let's say you buy a stock for $100 per share, and the stock goes down to $90. You have taken a $90 L, it's now worth $10, so you write down $10. Why do investors write down their investments? Well, to reflect the lower value of the asset on their books, to take a massive tax deduction, and to send a signal to other investors that the company's in trouble and that they should sell their shares. Should you be worried? Well, a write-down is never a good sign, and it means that there's a good chance these companies will lose their money on their investments. And the companies involved are some of the biggest, most well-known, respected names in venture capital. So if they're struggling, it is definitely not looking good for the rest of us. Like, follow, and share for more info.